Welcome to Skill Maker 101. This is a space for learning and growth. We're dedicated to delivering the best educational contents and help you gain knowledge and sharpen your skills in a unique and engaging way, without ever compromising our core belief: better skills, better you. Hi everyone, welcome back to our tutorial video about options trading for beginners. I hope you have got a very good start in the first video of how the put and call options were used in real-life examples of buying and selling a house. You're always encouraged to go back and rewatch this video as needed if you ever feel unsure on any parts. In today's Beginner's Guide number 2, we'll dive into the logic of both the seller and buyer behind put and call options, and clear up a major misconception that many beginners have about them. These first two videos cover essential foundations you must not skip, as they're crucial for understanding everything that comes next. Disclaimer: all kind of investments carry risks, and options investing has got no exception. This video is solely for education purposes and shall not in any way constitute any stocks or options investing recommendations. Investors should exercise own due diligence before executing any trade. In my first video, a quick introduction to options trading, I explained that there are two main types of options, the put and the call, and also the four basic types of options trade: sell put, buy put, sell call, and buy call. But here's the thing, just knowing what a put or call is not enough. To truly understand how options work, there is one key principle you must always remember, that is, every option involves two parties, a seller and a buyer. This part is often skipped or overlooked in many tutorials, paid courses, books, or even videos. They usually start by teaching only from the buyer's perspective. That was my experience too, and trust me, it made things way more confusing than it needed to be. When I first started learning options, almost every source only talked about the put buyer or the call buyer. No one seemed to think that it's important to explain the put seller and the call seller at the same time, resulting in not explaining the full picture, that for any option trade to exist, both a seller and a buyer must be present at the same time. That left me wondering, who's on the other side of the trade? What is he thinking about the trade? And how his reaction will affect my trade, etc. And if you've ever felt confused like I did, you're not alone. Think about it, if someone wants to sell a put, there must be someone else willing to buy that put, right? If no buyer, no deal. So, if you're serious about doing well in options trading, start by getting this part right. Take the time to remember and truly understand these four basic types of options: sell put, buy put, sell call, and buy call, along with their key characteristics shown clearly in this table. Trust me, once you grasp these fundamentals, the rest of the option strategies and concepts will make a lot more sense. And if you're still unsure about this part, don't hesitate to rewatch my first video, a quick introduction to options trading. It's there to help you build a strong foundation. By the way, if you like the video so far, remember to subscribe so you won't miss out the latest videos. In addition to the sellers and buyers logic, there's another common misconception about put and call that confuses many beginners, including myself, when I first started. The misconception is, we often hear that put means the price will go down and call means the price will go up. Well, that's only partially true, and also misleading. That's only correct if you're looking at the trade from the buyer's perspective. But if you're looking at it from the seller's perspective, it's actually the complete opposite. So, here's the golden rule I want you to remember: every option trade has two sides, a seller and a buyer. And they're always taking opposite positions. In other words, when someone thinks the stock price will go up, he will either choose to do sell put or buy call. Likewise, when someone thinks the stock price will go down, he will either choose to do buy put or sell call. So, in every trade, the seller and buyer have opposite goals, they both take on risk, and only one side will profit in the end. That's why I always say, options trading is a fair ballgame. One contract, two sides, both taking a risk, but heading in opposite directions. In other words, the general idea that put equals price down and call equals price up is incomplete, and often misleading, it needs to be corrected by always asking, from whose perspective, the buyer or the seller? If there's one thing I wish I'd understood from the very beginning, it's this: to truly understand an options trade, always look at it from both the seller's and buyer's point of view, at the same time. This mindset will help you understand why each side enters a trade, see how risk and reward are distributed, and build a much stronger foundation for learning strategies later on. Once you get that, trust me, everything else becomes easier: strike price, premium, risk, reward, strategies, and more. Now, let's look at another important basic every beginner must understand. Important components in an option contract. 1. Ticker symbol, name of stock selected to trade. 2. Expiration date, options expiry date or validity period. 3. Strike price, it's the stock price the seller or buyer agree to trade. 4. Choice of option strategies, put or call or combined. 5. Choice of action, to sell, as a seller, or to buy, as a buyer. 6. Premium, it's the price or fee of the option contract. 7. Contract size, minimum 1 lot, 1 lot equals 100 shares. Well, let's recap what we've learned today. An option contract has two sides, a seller and a buyer. There are 4 basic types of options. We can choose to be a seller or a buyer. We can choose to trade put or call option. Put doesn't mean price goes down and call doesn't mean price goes up. Option is a fair ball game. It's a battle between the seller and buyer on opposite directions. If seller wins, buyer will lose, and vice versa. And finally, the important components in an option contract. Now that you have got this foundation clear, understanding the logic behind sellers and buyers, and why put doesn't always mean price down and call doesn't always mean price up, you are ready to go deeper into specific types of options trades or strategies. In my next video, we will explore the put option, and explain the difference between selling a put and buying a put, step by step, from the seller's and buyer's perspective. So, if you found this video helpful, don't forget to like, subscribe, turn on the notification bell and share it with your friends as well. Thanks for watching, happy learning, and I'll see you in the next video. Bye.